Good evening, investors. Hope you all are doing great. So today again we are here in SBI MF Partner Portal. So as I am a mutual fund distributor and also an insurance advisor, so I get access to SBI mutual funds. Today we are going to review or discuss about SBI Credit Risk Fund. Before this video, we discussed SBI Magnum Constant Maturity Fund and we told about all the details and whatever was there. Today we are discussing SBI Credit Risk Fund. It is a medium-term capital appreciation fund. If we talk about the age of this fund, the age of this fund is 21 years and returns since inception. So from 21 years average, if we see the returns, it is 7.73%. The risk rating rated for this fund is high. AUM or assets under maintenance management of this fund is 2,213.59 crores and the NAV as of September 24, 2025 is 46 rupees 46.3751. If we talk that for whom is this fund suitable for, this fund is suitable for medium term investors who are wanting to invest money for 1 to 3 years. Minimum initial lump sum amount, if you want to invest in one time, then the minimum amount you need to invest is 5,000 rupees. And if you are wanting to invest, let's say in SIP format or systematic investment plan, you want to invest daily, monthly, weekly or yearly, then you can invest a minimum of rupees 500 rupees. Now let's see what are the details of this fund. So if we see the objective of this fund, it is at first let's categorize this fund. SBI Credit Risk Fund is a debt fund and it is also an open-ended fund. The objective of this fund is to provide the investors an opportunity to predominantly invest in corporate bonds rated AA and below, excluding AA plus rated corporate bonds, so as to generate attractive returns while maintaining moderate liquidity in the portfolio through investment in money market securities. So what does it tries to tell you? What this fund does, it invests your money in corporate bonds which are rated AA or below. So what does that do? It gives you attractive return. It generates attractive returns while also maintaining a moderate liquidity in this your portfolio. By how does it maintain moderate liquidity? By investing some of the amount in money market securities. Now if we see the benchmark of this fund, it is 2 benchmark and the additional benchmark is price in 10-year gilt index. Launch date of this fund is 17th July 2014 and oh my god, how is this possible? Because we saw there the age of this fund was 21 years, then how did it launch in 17th July 2014? We need to see that expense ratio of this fund is 1.55% and the exit load is for exit within 12 months from the date of allotment for 8% of the investments, nil for remaining 3%, for exit after 12 months but within 24 months from the date of allotment for 8% of the investments, nil for remaining investment 1.5%, for exit after 24 months but within 36 months from the date of allotment for 8% of the investment, nil for remaining investment 0.75%, for exit after 36 months from the date of allotment, nil. So if you do not want to give any exit load to the government, then you need to redeem after 36 months. We have already seen the returns since inception. Now if we see the last year returns, it was 8.14%. Last 3 years return average was 7.94% and the last 5 year returns for this fund was 7%. Minimum investment criteria we have seen, but if you want to invest, let's say you have invested 5,000 rupees and again you want to do any lump sum amount, then minimum additional lump sum amount would be 1,000 and in multiples of 1. Historically, if you see, it is a pretty safe fund. The growth seems steady. Last 3 years. Also, you see here the growth is steady, and last 5 years, it is a pretty clean graph. No problem with that. And now, if we see the riskometer of this fund, what does this riskometer do? Riskometer helps investors understand that the principal will be at high risk. So if we see here, the benchmark for this fund is moderately risky, but this fund is listed or the riskometer of this fund is high. So if it is high, then because it is high, that is why it is giving you good returns. Now let's see the overview of this fund. We have already seen the objective, and let's see what is the strategy of this fund. The scheme aims to generate attractive returns through high yielding corporate debt securities which are rated below the highest rating. So the highest rating is AAA. So what does the scheme do? It invests in high yielding corporate debt securities which are below the highest rating, means below AAA, that is AA or less. This fund will follow an active credit management strategy. An active credit management strategy is followed to give you good returns or generate you attractive returns for this fund. So who is the fund manager? Who will manage your money? Your money would be managed by Mr. Lokesh Mallya. Who is Mr. Lokesh Mallya? Lokesh Mallya has over 17 years in research in the fixed income market. He has been associated with SBI Funds Management (SBI FM) since 2014 as a credit analyst and now has fund management responsibilities. Prior to SBI FM, he has been associated with Aditya Birla Sun Life Asset Management Company Limited as a fund manager and credit analyst. He is charter holder of the CFA Institute USA and also a FRM charter holder of Global Association of Risk Professionals (GAL), managing this fund since February 2017. So Mr. Lokesh Mallya has a pretty good experience regarding this fund or regarding any funds. If we see the breakup of this fund, portfolio breakup, let me just increase it and let me increase the size for you. Government of India has 14% of this fund. 5% is invested with Aadhar Housing Finance Limited. 5% is invested with Nirma. 4.78% is invested with Info Parks Properties. 4.78 in Renew Solar Energy, Jharkhand. 4.52 in HG Infra Engineering. 4.49 in Godrej Seeds and Genetics, 4.49 in NJ Capital Private Limited, 3.89 in Eris Life Sciences, 3.74 in Sandhu Manganese and Iron Ores Limited, 3.63 in Ashok Buildcon Limited, 3.63 in Avans Financial Services Limited, 3.62 in Redsurf Global Private Limited, 3.44 in Aditya Birla Renewables Limited, 3.43 in Motilal Oswal Home Finance, 3.4 in JSW Steel, 3.37 is in cash or cash equivalents, 2.98 in Cube Highways Trust, 2.92 in Yes Bank Limited Tier 2 bond under Basel 3, 2.56 in Sheila Phone Limited, 2.55 in Vistar Financial Services Private Limited, 2.29 in Aditya Birla Real Estate Limited, 2.26 in GMR Airports, 2.26 in Prestige Projects Private Limited, 0.9 in Yes Banks, 0.77 in Latur Renewable, 0.68 in Mahanagar Telephone Nigam Limited (MTNL), 0.4 in Brigham Housing Finance Limited. So this is the breakup of our portfolio. Whatever the money you invest, let's say 100 rupees, 5,000 rupees, 10,000, 1 lakh, your money will be divided in the given format. Now let's see what are the sector allocations of this fund. So 23.42% is in financial services, 14.09 is in sovereign, 12.61 is in power, 8.15 is in construction, 7.04 is in realty, 5.24 in services, 5.03 in chemicals, 4.49 is in FMCG or fast moving consumer goods, 3.89 in healthcare, 0.74 in oil, gas and consumable fuels, 3.4 in metals and mining, 3.37 is in cash, 2.56 is consumer durables, 2.29 is in forest materials, and 0.68 is in telecommunications. So this fund is pretty well diversified. Now let me just decrease the size. If we see the performance of this fund in line with the benchmark or the additional benchmark, in a 1 year time frame, it has beaten the benchmark as well as the additional benchmark. If we talk about the 3 years time frame, it did not beat the benchmark, but it has beaten the additional benchmark. If we talk about the 5 years benchmark or 5 year performance, it did not beat the benchmark, but it has beaten the additional benchmark. And if we talk about since inception, the benchmark did a pretty good performance. It has beaten that additional benchmark, but it could not beat the benchmark. Now let's say what would happen to your money if you had invested this money before 1 year. Before 1 year, if you had invested here, then you would have close to 10,800. If you had invested 10,000 rupees in this fund, you would have close to 10,814. If you had invested here for 3 years, your money would have become 12,582. If you had invested before 5 years, your money would have become 14,026. And if you had invested since inception, then your money would have become 22,900 rupees. So that's all for today's video. If you want to invest in this fund, I will provide the direct investment link in the description box. And if you want my experience or my advisory regarding this fund, then you could contact me in the given mobile number as well as the email ID that is provided in the description box. Hope to meet you in the next video. Thank you for watching this video.